are expecting an imminent approval with a bunch of these spot Bitcoin ETFs. Do you think we're going to see kind of like immediate reaction in the price, or is this going to kind of maybe be one of those, buy the rumors, sell the news is kind of what everyone's saying right now? For me, I just think it's going to maybe take a while for these large institutions to learn about Bitcoin. And I'm thinking maybe the market might be a little bit impatient about, what the impacts of these things will be long term. I'm pretty bullish on their impact, but I was wondering if we could just kick it off and just hear your thoughts about maybe the short to medium term about what this would mean to the market and to the price.
Well, I'm like you, where I tend to lean conservative on this answer. The short answer is I don't know, because any sort of like multi-week or multi-month pricing is really about just market structure, speculation, liquidity flows, that kind of thing, which is not really the timeline that I specialize in for any of my price outlooks on any asset, especially something as volatile as Bitcoin. So I do think a lot of the initial ETF burst, is some of the run up we've already had is anticipating that. So I don't necessarily expect fireworks in the first week, but Bitcoin does things week by week or month by month that can always shock to the upside or downside. So it's just not something I have any sort of conviction on. I do think in general it'll take time for advisors and other pools of capital to allocate. I don't think it's necessarily the case that, just because there's a Bitcoin ETF that, like a 3% allocation is going to be standard across portfolios. That's just not necessarily how things work. I think it just takes time to diffuse into that. There'll be some that, have wanted to allocate to Bitcoin for a while, and they've not had the green light to do so. And once they have the green light, those will probably be among the first to start getting, their own pool of capital, their clients allocated. Whereas other ones, I think, will still take years. An example I've given before is that it's been studied for a while that adding a gold slice to a typical 60-40 stock bond portfolio tends to improve the risk-adjusted returns of that portfolio. And yet you still generally see not a lot of usage of that, even in the pre-Bitcoin era. And so kind of these outside monies just generally are not, just fully embraced up to the extent that you would expect them to be on the numbers alone. So yeah, I think it takes time. I think it's it's a multi-month, multi-quarter, multi-year story if this plays out. I've also kind of, in my analysis and my tweets and everything, kind of purposely talking about the ETF a little bit less than others, just because so many other people are talking about that so frequently. And I just find that while a Bitcoin ETF, I think in some cases, in some ways inevitable, any large and liquid asset of the size generally should have an ETF. We probably should have had one a while ago. It's normal for there to be one. But I think the more exciting story is kind of the growth of Bitcoin in hubs around the world. So I've been kind of focusing on and really excited by anything that kind of looks like Bitcoin Beach looked a few years ago. So these hubs popping up in Africa, other hubs popping up in Latin America, hubs in Indonesia and other parts of Asia. Those more distributed hubs, I think, is healthier in the long run. And the main thing that the Bitcoin ETF does is obviously it can bring more capital into the space. Tens of trillions of dollars in capital, a fairly small allocation can really kind of be meaningful to the price. Longer term, it can also potentially reduce the volatility a bit because you get that rebounding effect with portfolios, which I think is healthy for adoption outside of that kind of walled garden ecosystem as well. I mean, basically, if Bitcoin was a little bit less volatile, you could potentially see more of it among, just around the world. So I think in general it's all good, but I just don't really have any sort of firm view on what happens in the first quarter of the release, because you have to, that's mostly a psychology question rather than something you can just model analytically.
I was wondering if I could ask you a question about, what you said about gold improving risk-adjusted returns of a portfolio. And I was shocked to hear the stat that 71% of financial advisors have no exposure or very little exposure to gold to this day, despite that statistic. Now, in 2023, Bitcoin had the third highest risk-adjusted returns as measured by like a Sharpe ratio, only behind like Meta and Nvidia, these like tech stocks. But similarly, I mean, I look at gold and how little people are allocating to that, and it's been around for a long time, and it's shown to have improvements on the risk of a portfolio. And so, what's it going to take for these advisors and people to look at Bitcoin when they haven't even looked at gold? And why do you think they haven't adopted or brought gold into a portfolio despite that?
I think the challenging thing with gold, I mean, the first of all, the opportunity, the reason gold does well for a portfolio, at least historically, is that the decades where it does really, really well tend to be the decades where stocks and bonds don't do particularly well. So, for example, the 1970s and the 2000s decade were just enormous bull runs in gold. And they on average were more inflationary decades. On average, bonds and stocks did not do particularly well, whereas gold soared. Whereas gold tends to stagnate in decades where you have a strong disinflationary growth period and stocks just kind of go smoothly straight up. That's where gold tends to stagnate. So that's why it's historically been a portfolio diversifier based on the numbers. Why people don't do it is because one is that when something underperforms for a number of years, kind of advisors that have been allocating to it tend to be underperforming, and then there's hesitancy among new kind of pools of capital to go in. Um, these types of kind of long term Sharpe ratio averages, they take years to play out. You can have years where it's not working and then years where it's working kind of all at once, and all those portfolios are kind of based on averaging that together. The advantage of Bitcoin is that it's rocket fuel. So it's, gold is one of those things where a 5-10% allocation slightly improves the Sharpe ratio of a portfolio historically. Whereas, we've all seen the research, including at Nakamoto Portfolio, of how a small slice of Bitcoin has historically meaningfully improved returns because it's obviously a much higher volatility factor, much better performing asset so far. So to the extent that it can outperform gold in terms of reaching into portfolio allocations, so not in terms of price, but can it penetrate portfolios better than gold has? I think the reason it could do that is because it's newer, it's better performing. Investors, gold has that kind of aged aspect to it, whereas Bitcoin is that more forward-looking aspect to it. So if advisors want to signal to their clients that they're not behind the times and things like that, I think having that Bitcoin slice makes sense. So I don't necessarily think that Bitcoin's going to have the same problem that gold has had in terms of portfolio allocation. It's just I think it's worth keeping in mind when people have these really bullish estimates for how much capital is likely to flow in quickly. Luckily, the numbers are just so big that it only takes a small amount, a small percentage of that capital wanting to get in, and the numbers get pretty crazy pretty quickly.
Yeah, you're already seeing that narrative kind of come up in terms of a 1% allocation and what that can do to portfolio. I saw a couple, a report, an article in Barron's recently that recommended that or kind of talked about the benefits of that, as well as a piece from the former head of research at AQR Capital, which is a really respected firm in TradFi, kind of talking about the benefits that Bitcoin could add. So I do think that'll be a narrative over the next 12 months. And I'm wondering if I could ask you about maybe some of the risks that you see with this Bitcoin ETF. There's a ton of chatter about the centralization that can occur in, a large hoard of Bitcoin being held at pretty much one custodian, Coinbase. Do you see kind of risks to Bitcoin itself or maybe the market structure that you'd like to touch on? I'd love to hear your thoughts on that.
Well, I think so. One point is that Grayscale already holds a ton of Bitcoin, and I think that it's going to be challenging for some of these other ETFs to approach that number of Bitcoin. So I think, I mean, eventually, because of Bitcoin's price action, they'll exceed it in dollars terms, and Grayscale itself might, exceed its former highs in dollar terms. But in terms of like the percentage of Bitcoins that are held in these ETFs, I think that we already have a decent little chunk in these types of structures, and so I think that's likely less impactful, in my opinion, than many others are making it out to be. So kind of like how I purposely been talking about the ETF a little bit less than others from a bullish angle, I'm also less concerned about the ETF in terms of risks than what I've seen some of the kind of the ETF bears pointing out. Luckily, Bitcoin's proof of work. It's challenging to change. if the ETF had been approved a long time ago and a much larger percentage of Bitcoins were held in these really big kind of initial buckets, that would be, I think, more concerning. But the fact that these ETFs, if to the extent that they're coming, are coming 15 years into Bitcoin's lifetime, there's been a good amount of time for it to distribute widely, um, and so I'm less concerned about that concentration risk. And another thing I'd point out is just that, like I said before, any asset of this size and liquidity is generally going to get an ETF. Um, and so, if Bitcoin is not good enough to withstand ETF structures, then it was never good, right? And so, in my analysis, indicates that it is good. And so, I don't really see any sort of major. I mean, there are always, you should always ask the question around concentration and things like that. Like, I think there's reasonable questions to ask right now about mining pool concentration or ASIC supply chain concentration. Those are the types of questions around concentration that I'm a little more focused on. Whereas I don't view the ETF concentration risk um, as meaningful as some others have made it out. Especially just like I said, considering how much coins are already at Coinbase, how many are already at Grayscale, which I believe uses Coinbase's custody already. And so a lot of that's already there.
Yeah, in your book, Broken Money, I love the last couple chapters where you were kind of go through some of the really logically some of the attack vectors or like I would say like reasonable FUD around Bitcoin, but also the way you broke down proof of stake. And I'm wondering if I could just bounce this question off you. If Bitcoin was proof of stake and it was about to get an ETF, would you be more concerned about these kind of centralization risks?
Well, of course, anything that's proof of stake has more risk to it with concentrated ownership. Whereas with Bitcoin, it's mitigated because the ownership, it can obviously affect if there were to be a hard fork. Which hard fork wins. So it's not that it's a non-variable, in holding concentration. It's not like a non-variable, but it's a much smaller variable in a proof of work network than a proof of stake network. And yeah, in my book, I tried as my best to kind of outlay the risks. And as someone who was watching Bitcoin for longer than I owned Bitcoin, I went through the process of finding it interesting, but the risks kind of outweighed my expectations. And then over time, as some of those risks were addressed and as they understood it better and as my expectations grew, eventually my bullishness far outweighed my risk scenarios. But it doesn't mean those risk scenarios are not there. So out technical bug risk, because Bitcoin, in its 15-year history, there has been a number of kind of technical challenges and bugs along the way. And then the ones I mentioned before, kind of vectors of centralization. So to the extent that the miners somehow get centralized more than would be ideal, or to the extent that the supply chains, the fact that they already have a lot of centralization, if they get weaponized in some way, I try to imagine myself in the Pentagon or in some other kind of like seat of power and thinking, okay, if I were to want to go after this network, what are the ways I would do it? So it's not that it's invincible, it's just that it's robust and it's resilient. That's also why I like of race to win the war. It's the younger Bitcoin is, the smaller Bitcoin is, the more windows of vulnerability there are against it. Whereas generally speaking, the bigger it gets, the more understood it is, the more popular it is, the more that the existing large systems have trouble pushing back on it because they have their own checks that hold them back from kind of going to the mattresses on Bitcoin, and a lot of that is the kind of the social defense that the United States has rule of law, to a pretty significant extent, and so the more popular Bitcoin is, the more people understand its use case. That's a protective force. So I think that all the work that people do on educating around Bitcoin is important.
100%. And the education is going to continue to be important. I was wondering, like, real quick, like, if we could just get, like, what do you think are the benefits of owning self custody over an ETF for somebody who's a beginner, maybe in the audience who's trying to decide like, well, why not just buy this ETF? It's really easy. It's sitting in my brokerage account. Why would you say, hey, why don't you just buy the real thing? Why don't you just buy Bitcoin? Can we talk about the pros and cons a little bit?
Yeah, so the ETF gives price exposure. Obviously, you have custodial risk. The main benefit of the ETF is just that it's existing pools of capital that are either hard locked into certain structures or soft locked in. People have, say, a brokerage account. They don't want to put another account. So there's a range of kind of how locked in certain pools of capital are, and the fact that they can just buy it within their existing structures is beneficial. There's also, say, just the green light of the SEC and BlackRock and other entities that I've seen studies that show that many advisors just are not even allowed to allocate to it. And so, to the extent that they're allowed to, is a powerful signal. So that's kind of the main thing, is just the convenience of the ETF. I mean, over the past years, I run portfolios, and to the extent that I want to put a Bitcoin slice in them, and I'm running a portfolio in a brokerage environment, my options have been things like GBTC or MicroStrategy or some of the futures ETFs. And so, to the extent that a spot Bitcoin ETF exists, that would be the purest way to play that when you're playing it from that kind of walled garden perspective. The reason, of course, to own your own Bitcoin is that you want something more than just the portfolio slice price exposure. That you want to remove custodial risk first and foremost. You want to remove the risk that either the Bitcoin is going to be lost or stolen or hacked in some way or confiscated, or simply removing the risk that you'll never be able to withdraw it in any kind of reasonable way. Um, and the main kind of power of Bitcoin is that if you self-custody it, especially if you self-custody it in kind of sophisticated ways like multi-sig, collaborative custody, that kind of thing, is that if you move around the world, you still have access to your Bitcoin in various ways, and so it's that you can bring with you globally. If you have a large stash of gold, for example, physical gold, good luck bringing that across borders in any sort of like low friction way. It's just you're either going to get blocked or it's going to be a massive hassle. Whereas with Bitcoin, people have their kind of self custodial stack. They have the optionality to kind of send payment to anyone with an internet connection, and then they have the optionality to bring a lot of their stack or all of their stack with them, before they need to. So the walled gardens, and then they have to somehow get out of that walled garden and go. And that's one of those things where Americans don't really think about that problem as much as people in other countries do, because we have reason to leave. We have a much bigger country. We have one of the more desirable countries. More people want to come into the country than leave the country. Whereas when you think of the 200 jurisdictions in the world, many of them are smaller. Many of them are more troubled. Capital wants to be just more globally portable. And so that portability aspect is a huge aspect of what makes Bitcoin powerful. It's not just a scarce asset that you can own. I mean, there are plenty of scarce assets. Like Apple stock has been in deflationary supply for the past 10 years. Um, but the key thing with Apple stock is you can't self-custody it, and you can't send a fraction of Apple's shares to someone else's payments. It doesn't give you that same power. It's just something that you have price exposure to based on the performance of the company and what investors are willing to pay for that company in terms of like an earnings multiple or a sales multiple. Whereas the true power of Bitcoin, in addition to its scarcity, is that moneyness, that ability to self-custody it, the liquidity of being able to, the technology of being able to send it to others. And all of those extra features are lost if it's just an ETF. So ETF's kind of that first step for people that just want price exposure. They just want that kind of portfolio slice. They have certain constraints on their capital for one reason or another. It's useful for that purpose. Yeah, the main features are better when self-custodied in some way, or at least people can do things like, if they have an existing account somewhere, the ETF could be useful compared to not having any ETF. But it doesn't mean they also can't have their own stack on the side and then they unlock more of the benefits of actually owning Bitcoin.
Yeah, and you mentioned like the global nature of Bitcoin. I mean, a lot of people, frankly, just won't have access to U.S. financial markets to even buy an ETF. So its accessibility comes into play too, and all the different features that you mentioned, which makes it special. People come to Bitcoin for different reasons. But one kind of group of people that have been limited from Bitcoin, I would say, are financial advisors. Bitwise put out their survey. I think they survey around 450 financial advisors every year. And they said that only 19% felt like they were able to buy any kind of Bitcoin in their client accounts. And 88% are interested in purchasing Bitcoin and are just waiting for a spot Bitcoin ETF. And I'm wondering how you see kind of flows occurring between proxies. Maybe these financial advisors have been using things like MicroStrategy or even GBTC or Bitcoin mining stocks, even some of these chip companies. Do you see kind of flows out of those assets into an ETF, and how do you see that playing out? I'd love to hear your thoughts about MicroStrategy specifically.
So I think over time, to the extent that markets are efficient, you would expect to see, MicroStrategy's had these periods where it becomes overvalued relative to its NAV. You would expect that to diminish over time. There are pure proxies. Now, MicroStrategy is still super valuable in the sense that instead of paying a fee, you have Bitcoin attached to a profitable company. It also has that long-term financial leverage attached to it, so it gives different risk-adjusted returns than a spot ETF. But yeah, to the extent that portfolio managers have kind of been limited in terms of options. Once they have more options, that starts to broaden out. I think an example of that is the GBTC premium. That had a premium for many years, and I think part of the reason was that was one of the few vehicles that certain pools of capital realistically had exposure had as like an option. Whereas over time, as more other types of funds came out, not necessarily publicly traded, but just various ways to kind of access for Bitcoin in a robust way, paying like a 40% markup for GBTC was very unattractive. And so a lot of that capital kind of went elsewhere. And I think you could see a more mild version of that with some of the existing proxies. And I think MicroStrategy's been playing that well, which is when their equity, when their equity is expensive, issuing more equity to buy more Bitcoin is an effective strategy. If you look back in history, a lot when companies do like share buybacks, historically they tend to buy back shares when times are good and they're expensive, and then when there's a recession and their shares are cheap, they're usually like constraining their capital more and they're not buying shares, so they end up being pro-cyclical. The really best CEOs in history have done like a counter-cyclical approach where they buy more shares when their shares are cheap, and then they go to their capital when their shares are expensive. And in the past few years, MicroStrategy's had the hallmarks of being its treasury management has been sound in the sense that when interest rates were super low, they issued debt. And when their equity was expensive, they issued equity. And so they kind of targeted different parts of the capital structure, I think, very efficiently. But yeah, I think going forward, it for a lot of pools of capital, it makes sense to hold the ETF because you don't have the leverage attached to it. You don't have other things like that. And it's just a more traditional type of vehicle. It's easier to act because with MicroStrategy, some angle, from an analysis perspective, you're looking at how much Bitcoin they have, you're looking at how much liability they have, but then you're also trying to factor in what is the value of the software business, and it's a sum of whole kind of that has to be done. Whereas the Bitcoin ETF is just the Bitcoin ETF. So advisors that say, we want a 3% exposure to Bitcoin, something like the spot ETF makes more sense in that context.
Is there, people have brought up MicroStrategy purchasing Bitcoin, using it as a treasury reserve asset. Do companies also do that for securities like stocks? Is that common? Like, would they be inclined to put, something like an ETF on their balance sheet? I haven't really heard of that much happening in terms of companies, purchasing stocks, for instance, and putting it on their treasury reserve as a treasury reserve asset?
So they have this. I don't know the exact thresholds, but there's a limit to how much like exposure they can have to securities before they would be considered like an investment vehicle rather than a corporation. And so they'd be regulated differently and generally less favorably. Whereas Bitcoin not being a security doesn't cause that. Whereas I believe
Right.
an ETF would, because it's a security wrapped around a non-security. So yeah, another thing is just that a lot of companies, the CEO is managing from a perspective of risk. So anything that has kind of you know, bad optics, like if you buy Bitcoin and then Bitcoin goes down a lot, that can generally hurt them more than if they buy Bitcoin and Bitcoin goes up a lot. Whereas small businesses, I think, have been much more primed for this because the owner often is the majority controller of the business, and so they're managing less about risk and more just about the long-term fundamentals of the business. And MicroStrategy's been an example of one that, even though it's publicly traded, it's very strongly held by the founder. And so they've been able to make those decisions that are not based on career risk. Um, I don't necessarily expect a flood of corporations to be adding Bitcoin anytime soon. I think it's more of the investment pools of capital is what we should be looking at primarily. Um, I think another aspect is just the cultural aspect. So for a long time, there's just not been a very attractive asset for corporations to hold other than cash equivalents. And they, as a general rule, they decapitalize themselves because cash has a lower return than their typical cost of capital. And so usually the right answer is, return that to shareholders, buy back shares, pay dividends, that kind of thing. And I think it's a big cultural turning point when there's finally an asset that can keep up with equity performance over the long term, and therefore a company can have more optionality to determine how big they want their treasury to be. I think it's not been healthy for capital markets that any sort of savings are considered undesirable. I don't think that's been healthy. And in the long run, Bitcoin can fix that. But I think it's not something we'll be seeing a lot of, in my opinion, in the next 3 years or so. I think there's still going to be a lot of career risk associated with Bitcoin, and that it's more the capital I would look to are more like the investment pools of capital rather than the corporate ones. But I do think that the people that are kind of recommending that strategy to corporations, I think, are doing good work, and I think that I think in the very long term, it does make sense for corporations to have savings, because savings give them optionality. If you look at the long-term statistics for scale, it's very high over any kind of multi-decade time frame. And being able to pivot your business is partially dependent on whether or not you have savings. And not every company is going to be in a position to issue equity or debt when it's facing challenges. Whereas if they had savings that are not being debased, they have more optionality during times of. So, but I just think that's a very slow moving ship to turn culturally.
Yeah, it'll certainly help make them more resilient, at least if they're saving in a money that can't be debased. We actually, you said to focus on investment pools, and Alex Thorne, head of research at Galaxy Digital, is up on stage. And you guys actually did some research looking at kind of potential inflows that we could see from those investment pools. Would you maybe touch on some of your findings or on that, from that research report? And welcome, my friend. Happy New Year.
Yeah. Yeah. Happy New Year, Sam. Thanks for having me. Hey, Lynn. No, I mean, I think Lynn hit it right on the nail on the head. There are big pools of assets that don't have access to Bitcoin exposure. It's just a fact. I'll describe them, but I mean, primarily looked at financial advisors. And these exist in sort of three buckets in the United States. So you have financial advisors affiliated with broker dealers, right? So these are the big wealth management platforms you might think about, right? These are the Merrills, the Morgan Stanleys, the Goldmans. I don't know the whole list in front of me, but that have financial advisors that work for them, right? They run big platforms, and they typically trade through them, and they can only offer products to their end clients that the broker dealers themselves approve, and they're actually pretty strict. It's not just even questions of suitability. There are even many, for example, that don't allow their advisors to put end clients into cannabis stocks, for example, right? Just because, they don't allow it, right? Then you have banks, literal, actual banks, and then there are independent RIAs, right? And most of those independent RIAs trade through white label platforms like Fidelity, Pershing, and Schwab. They basically like license out their brokerage platform in a way that financial advisors can use it. To combine those three is $48 trillion in AUM in the US alone. And independent RIAs could potentially put their clients into the cash settled futures ETFs, or they could put them into crypto linked equities such as balance sheet holders, or even into the trust products. Like those are probably available on most of those white label advisor platforms, but that's only about 8 trillion of that 48 trillion. By far the largest pile is at the broker dealer affiliated wealth management platforms, and as far as I know, none of them allow the trusts, except for extremely limited circumstances, the cash flow futures ETFs. A few of them have private Bitcoin investment vehicles for limited numbers of high net worth clients, right? So these are the NYDIG Bitcoin Fund, the Galaxy Bitcoin Fund, the Bitwise Bitcoin Fund, etc., but very few. So even setting aside any marginal increase in interest in Bitcoin at all, right? If we just apply a blanket uptake adoption out of this category of addressable AUM that say mirrors other things we see in Bitcoin adoption, right? Like, what we did is we said, okay, if 10% of that potentially addressable AUM turns on access, if it chooses to allocate anything, and we say, why not 1%? We'll stick with that. We have a separate pile of research, and I know many others have done it, that 1% is a significant but also reasonable small amount. 10% choosing to invest 1% gets us to about 14 billion in net new inflows in year one, and then we basically just ramp up the total amount of platforms that turn on access, right, in years 2 and 3. So we don't change in our analysis the amount that people choose to invest, or even the percentage of AUM that chooses to invest. We simply say, okay, well, this broker dealer already offers private funds to some clients, so they'll turn it on quickly, right, and allow the ETFs to trade there. This broker dealer's CEO hates Bitcoin, so they probably won't turn it on until year 2 or 3, right? And so we simply ramp up out of that 48 trillion what becomes accessible over time. That I could go on and on. You can read the report on our website, but the point is that Lynn's completely right. We don't have to actually believe that there's any additional interest in Bitcoin. There's a giant pile of assets that can't get any exposure to Bitcoin, and that these ETFs can unlock.
Yeah, I remember talking to financial advisors, and they were very interested in Bitcoin, but then they'd come back and say, well, we can't because our broker dealers won't let us. So now that might change with the introduction of an ETF. And it seems to me like, Lynn, you brought this up, like there might be like reputational risk for corporations still, and maybe these financial advisors, given the volatility of Bitcoin. But it's hard for me to look at the historical performance over the last few years, especially when you look at risk-adjusted returns. And when does it shift where there's reputational risk for not allocating their clients into this asset? I mean, it seems to me that they should really be taking a hard look in the mirror of why they're not allocating their clients' funds into Bitcoin. Do you see that shift happening even now or soon? It's kind of shocking to me how they still look at this thing, given its performance from a risk-adjusted perspective, and they're still saying, no, it's too risky. I'll throw it to you, Lynn, and then Alex, maybe.
Yes, I think it shifts every year, especially every kind of 4-year cycle. So it was riskier for MicroStrategy to go in than a company now. But there's also a big difference between investors and corporations. So investors, it's in the process of being de-risked for a while to put, say, 1 to 5% of a portfolio into Bitcoin. It's long been considered reasonable that high volatility assets or illiquid assets like venture or private equity can be in long-term pools of capital. So that's been de-risked and then still is being de-risked over time. And the approval of spot ETFs should be kind of a stepwise improvement in de-risking that. The riskier thing is, so corporations generally are judged less by their balance sheets than their income statement. And so, if a corporation puts like 3% of its balance sheet into Bitcoin, it's like it raises eyebrows, but then doesn't really kind of reasonably change a lot of things for them in the next few years, which is generally what they're modeling under. Um, and whereas if they go kind of all into Bitcoin, the way that MicroStrategy has, that obviously brings a lot of career risk. So I think that from the CEO perspective, that's still an area where there's more career risk attached to it, just because holding assets on a company balance sheet is just less conventional. Whereas having that kind of routine small slice of Bitcoin in a portfolio that's specifically meant for investing, I think in my opinion, Eric, we're already kind of at the stage where there's career risk for not doing it or not being open to it. And every kind of year that goes by, investors with that mindset look more kind of out of touch. But I just kind of think there's like difference between those types of pools of capital in terms of the career risk.
Alex, what about you? Do you think that is shifting right now? Let's focus on investors. Yeah.
Yeah, I think it is. I think that like there have been clear suitability reasons why it's hard, even if you come around to the financial returns and the risk adjusted returns of Bitcoin as an advisor, you're not really able to do anything with it right now, right? The trusts, traded discounts to their NAV, their fees are high, the cash settled future ETFs have roll cost and decay. You can't open sub accounts on Coinbase for your clients, right? There's not really a good advisor platform. Even Fidelity, which offers Bitcoin and ETH in brokerage accounts, doesn't have it on their advisor platform, right? So there's really just plenty of good reasons not to go to the second question of, well, wait a sec, is it a suitable, good investment for my end clients? Because the vehicles simply weren't there. I think particularly the maturity of the issuer applicants, right? I mean, you've got 7 of the top 25 ETF issuers in the world, including 1, 4, 9, 10, right, all involved here. These are not niche asset managers. There's going to be a lot, I think, less career risk going forward, and there's also going to be some incentive, right? Like you had it with oil, you had it with gold. It's a very rare that you have a new asset class come online with the world's top issuers all at once, right? From an investment portfolio standpoint. So, and also just the math speaks for itself. Like I think everybody in this room knows Bitcoin has historically been a great investment across multiple timeframes. But even last year, I mean, even on a risk-adjusted basis, which is accounting for volatility, I counted that it was basically the best performing asset against all major indices of asset types. With only like 2 mega cap stocks actually performing better on a risk-adjusted basis. So people see that speaks volumes, and now all the other risks are basically de-risked. They don't have to learn about. They don't. Advisors can't hold their own. Can't hold keys for their clients, right? The crypto and Bitcoin custodians that sell Bitcoin don't have a platform for them, right? The existing products were not suitable. So all of that matters, and it definitely helps remove career risk, I think, overall.
Yeah, I think we're definitely going to see that when we have like Larry Fink going on TV now saying it's a flight to quality. It's kind of removing that career risk when they can point to Larry Fink at the largest asset management firm in the world saying that on TV. Lynn, I know you got to go soon. I just wanted to ask you one final question, and then maybe you could say goodbye to the audience. People talk about this multiplier effect of how they look at these ETFs and they start to do the math about how much Bitcoin is just available to buy on exchanges. And they say, well, just because, some of this money is going to flow in, it doesn't mean that that's going to equal the price increases we see, because they're going to basically drive up their own cost basis as they all try to gobble up the available Bitcoin to seed their funds. What do you make of that kind of theory, I guess you could say, of this multiplier effect and how we could see really substantial price rises as these multiple ETFs come on board and have to seed their funds, and there's going to be all this demand and just not as much available Bitcoin for them to buy?
Well, so I think research shows the multiplier effect depends on your time frame. So, if $100 million wants to flow in a day, kind of net inflows, that can move the price. That has like a double-digit multiplier effect. So the market cap's probably going to go by up more than $1 billion based on that inflow on that very short period of time. But then as you stretch that out for quarters or years, the multiplier effect starts to diminish because it is a liquid asset, and so there's buyers and sellers at all times. And so some of that kind of inflow starts to get digested. Generally, a big trend we see is that during Bitcoin's raging bull markets, when it's going up 3x, 5x, 10x compared to some kind of, kind of cost basis from a few years ago, that's generally starts to unlock selling from some of those longer term holders. And it can be from a variety of reasons. Someone's, got enough money for like a house now, and they're at an age where they want a house, and so they start to kind of distribute some of their coins back to these new buyers, and they rebalance, or they consume more with their gains, and then there's another cycle of kind of new buyers in the market, and we've seen this pretty consistently so far. Now, in this particular cycle, we're still at the phase where we're still below all-time highs. The percentage of coins that have not moved in at least a year is still near its kind of all-time highs. But if you do start to see that kind of major multiplier effect happening, and you see kind of that raging price increase, I'd be pretty confident that there would be some sort of distribution back into the market. So, the multiplier effect, I think, kicks in hard initially. But then just as you go out, as you look at, say, the next year, the year after that, I think eventually you get to a top again, and kind of like another period of digestion and rebalancing in the market. There's also a challenge that if the price, when people, especially when they look at the linear chart of Bitcoin, it often looks like it's either in a bubble or it's a broken bubble. And so if you get that effect where Bitcoin is up multiples in a year, especially when it's at all-time highs, that can slow down the rate of, kind of larger pools of capital wanting to get into it, especially in size, because they're worried about kind of bring up the career risk again, or just not even career risk, but at that point, just kind of investment risk. Nobody wants to be the one that buys the top. And so they finally make the decision to allocate, and then that's when it has like a 2 to 3 year bear market. And of course, judging the top's hard, but the more extreme it gets, the more I think hesitant some of the more kind of careful pools of capital would be to kind of coming in size, at the same time as you would have some of that distribution from some of those holders that are up big. So I kind of expect the cycle to play out somewhat directionally similar to prior cycles. So I do think those statistics matter about how much Bitcoin has not moved in a period of time, but I don't take it for granted that they're never going to move. It's just that, at what price will they start moving? And I think that once you clear above prior all-time highs, especially meaningfully so, I think you would see some movement in a decent percentage of those coins. And thank you all for listening. I know this is going to continue, but I have to head out. But thank you, everyone.
Thanks, Len. Appreciate you. Alex, you still got time to talk for a little bit longer?
Yeah, I can talk for a little longer. I'm actually just grilling up some dinner as we speak.
Oh, nice, my man. John, welcome to the stage too. Alex, I wanted to ask you a couple questions. Well, one is, and I know obviously Galaxy is a pony in the race of the Cointucky Derby, to steal the term from Eric Balkunas. So only say what you can. But I was wondering if you could speak a little bit about Grayscale, because Grayscale seems to be a little bit of a mystery in terms of what's going on there. And one of the reasons is because the SEC doesn't want to be seen as picking any winners or losers. And some people are speculating that because they already have so much liquidity, I mean, they have I think over $25 billion worth of Bitcoin in that trust, it can kind of be seen as an advantage for them because in a lot of ways, an ETF is all about liquidity. Do you see that kind of harming their chances? And, Grayscale, you got to applaud them a little bit because a lot of this momentum came for the ETF approvals after they took the SEC to court and won. And so I got to applaud Grayscale a little bit, but I'm wondering if you could kind of comment at all about that dynamic of how they have so much Bitcoin already and how maybe the SEC wouldn't want to be seen as picking a winner or loser if they have similar odds as everybody else. Kind of what are your thoughts around that?
Yeah, it's tricky, Sam, like partly because their process is different process technically than all the other issuer applicants since they're seeking a conversion rather than a new listing or a new product launch. I really can't talk much about the differentiation between the different applications, but I mean, I absolutely do have to give credit to the Grayscale team. They presumably spent millions of dollars on their lawsuit, and it absolutely did force the SEC's hand. I mean, the only two arguments the SEC had ever made over 10 years of denials were the two that were struck down by the DC Circuit Court of Appeals as arbitrary and capricious based on their arguments. So they absolutely deserve credit for this. So not all the credit, but a lot of it. I mean, at least in the sort of the latest saga of the ETF story. I don't. It is a huge question. Like, what happens with Grayscale's vehicles? Like, I mean, and they're in a strong position, right? I mean, it is the largest Bitcoin fund in the world of any type that I'm aware of, right? So, but I honestly, we're just going to have to wait and see what happens.
Yeah. Yeah, it makes sense. I didn't mean to put you on the spot either. Maybe I wanted to talk to you a little bit about if an ETF gets created or whatever approved. To me, it's interesting as well because these ETFs can kind of be put into other ETFs and other mutual funds that could kind of have a compounding effect for demand as, some other ETF kind of tries to market itself saying, here, we have a sliver of Bitcoin in our ETF as well. Do you see that kind of evolving over time where these Bitcoin ETFs get put into other ETFs, other mutual funds, and it just kind of compounds from there?
Yeah, I saw that on X that there were some filings already by some other funds that would alter their structures to allow them to invest in Bitcoin through ETF. So, I mean, look, it's definitely possible. There are ETFs and mutual funds and funds that own tons of different types of things. Totally reasonable to assume that Bitcoin will be one of those things for some of those funds, right? I would say one thing that's really interesting about Bitcoin when it comes to portfolio construction is really very few people know where to put it, right? Like, which I actually think is fine. I've been arguing for years that it's fine. You're not crazy if you come to the realization that Bitcoin is something that's quite novel and new, and you don't know exactly, what investment bucket in your portfolio, no matter what type of portfolio we're talking about, that it should fit in. Like, it's actually like fine. You should embrace the novel nature of peer-to-peer electronic cash. Like, it is not something that has a good corollary, in my opinion. So, I mean, I think you're definitely going to see that. I think it's unclear. Are you going to see tech funds? I mean, if you look at Bitcoin as a innovative, digital version of gold, like, should a tech style growth bet there that digital version of is nothing more than taking an asset and putting it inside the most liquid and reusable in the history of the security industry, right? So it can be accessed every single way that other we can already send and receive it easily without any intermediary and ramps to get it without any brokerage. But a lot of the world's capital is reliant upon the existing financial industry. And in my view, like, why not? If I believe that Bitcoin is going to become extremely widely adopted as money, as a store of value, as any type of asset, I want that money everywhere. Like, I want to be able to hold it in my bank account. I want to be able to hold it in my brokerage account. I want to be able to hold it in my retirement account. I want to be able to self custody it and, cross a border with my 24-word seed phrase, or send it without any intermediary or censorship at all. Like, I want to be able to do it all, right? So to me, this is why I've always been bullish on these new market access vehicles. And like I said, if I hold a commodities mutual fund, I think it should have Bitcoin in there, and the ETF will make that easier.
I agree completely. I mean, it's just going to improve access. And the last thing I want to talk about is just the kind of the fierce competition that we are seeing or about to see between issuers to attract capital. And one of the ways they're going to do that is the fee structures. And Alex, I thought it was really unique what Galaxy and Invesco did, which was you guys are waiving fees entirely for the 6 months and first 5 billion under assets under management, I believe. So there's going to be 0% fee for the Invesco and Galaxy ETF. And they're going to be competing. And one of the things that I've looked at is just how the gold ETF market has evolved over time. And one of the things that some of them allow is physical delivery of the gold. It's one of the ways they differentiate themselves from other ETFs. Do you think one day we're going to see ETFs offer similar, physical, allowing physical custody of Bitcoin, so to say, allowing self-custody like that? Do you think there's going to be regulatory hurdles to that? I'm curious to hear your thoughts.
Yeah, there's by my count, there's 11 applicants, and it looks like the SEC has made them pretty homogenous for now, right? With cash, create, and redeem, and all the stuff that the Bloomberg intelligence guys have been reporting. And so, I mean, I think, but there are other things you can compete on, like you mentioned, fees, right? I mean, I think that's a clear one we're seeing. Without without getting into any specifics of any individual application, there is going to be differentiation over time. And I think, 11, I don't see 11 big gold funds out there, right? Like, I think this game is the Kentucky Derby. I do love that term, because there's a lot of horses in this race. And, I'd be very surprised, frankly, if in, 1, 2, 3, 5 years that there's 11 that have large viable products. And so there will be competition. It's going to shake out. It's going to shake out, I think, faster than people think, but we're almost there. We're almost there, guys. It's been 10 years in the making since the Winklevoss filed their ETF application. I think it's gonna really shake traditional and Bitcoin markets.
Yeah, the horses are finally being led into the gate after 10 years of trotting around. They're finally in the gate. It's about to go off. With John Hart, I wanted to give you a second to kind of speak your mind about some of these developments. What are your thoughts around the fierce competition that we're about to see, some of the impacts? I know you have a Wall Street background. I don't know if you have contacts at Goldman Sachs or anywhere that they're talking about this at all. I'd love to kind of pick your brain about what you're hearing from maybe your old colleagues about this ETF.
Yeah, what's up, Sam? And hey, everybody. I wanted to join earlier, but had to take a call. So thanks for having me at the tail end here. First I wanted to say, I think rightfully everyone's focused on the will it get approved, when it's going to get approved, who's going to get approved, and then what's going to happen immediately after launch, how many assets are going to come into this thing, what's it going to do for the price. Rightfully, those are kind of all the questions right now. It'll be interesting to see how quickly the focus changes to, okay, all of that's in the past now. There's a significant amount of assets that has flowed into these things. The price probably has appreciated a good amount. Now we're talking about, what does this mean for Bitcoin? Now we're talking about, what does it mean that there's a really significant amount of Bitcoin held in these ETFs, and what does that mean for Bitcoin long term? So I think the conversation will shift to that. We'll see how long it takes for it to shift to that, but just wanted to throw that out there kind of as like a high level comment. And then in terms of, I have chatted with a few of my former colleagues. So I was always in institutional asset management at Goldman. But I have plenty of colleagues who either always worked in high net worth wealth management, or maybe they switched to it over the years. And I've just like informally reaching out to them over the past few weeks and months. And I kind of just say like, hey, what are you guys thinking about Bitcoin? This ETF might get approved. Are you guys like talking about it? If it does get approved, are you, won't touch it, or you're open to it? Where do you guys stand on this? And I would say no, and this is maybe, 10 or 12 people. So not a huge sample size, but it's more than one or two. I haven't gotten any of them that said, we won't touch it. It's a Ponzi scheme. You're an idiot for even bringing it up. It seems like that era of the attitude towards Bitcoin has mostly passed in terms of TradFi people. They kind of, I think, know enough now that it's probably not going away. That they're not full on Bitcoiners, but I think they've accepted that it's not Dutch tulips at this point. But at the same time, they're not like, oh yeah, we have a plan in place to allocate, this much Bitcoin to all of our clients' accounts. Like it's not that. They don't have that much foresight here and planning and strategy. There might be some RIAs who are doing that, around the country, but I think those are the ones who've been into Bitcoin for a few years. And they're kind of, ready to allocate their clients to an ETF if they haven't already allocated their clients to spot Bitcoin in some other way. So that's kind of been the feedback that I've gotten from these people. And I do think it's interesting. We're going to see if big wealth management platforms, once this thing gets approved and launched, are they going to pretty quickly say, okay, we're ready to allocate a small percentage to accounts where we have discretion, or we're ready to recommend that accounts where we don't have discretion take a small allocation. We'll see if that happens quickly, or if this is more like they haven't done the planning and the education, and they're going to say, okay, now this thing is live. We have to do some internal education, and maybe that takes a few months. And that's where the price will be important, because if the price moves up in a significant way, that's going to inspire them to speed up that education, I think. So that's kind of what I'm thinking about the next few weeks here. It's an exciting time for sure.
Yeah, number go up also attracts the big institutional investors too. So it's not just retail investors, and it's going to be an exciting year. And so I appreciate everyone coming on stage and sharing their thoughts. Alex, Lynn, John, it's been a good conversation. I think we touched on this. I think everyone on stage probably agrees that owning self-custody in Bitcoin has advantages that an ETF doesn't, but it will be a catalyst for Bitcoin's price in the coming years. I agree with Gabor Gerbax, who is an advisor over at VanEck, who says that maybe we overestimate this in the short term, but underestimate what impacts it could have in the long term in terms of institutional adoption for Bitcoin. I always see the ETF as kind of a top of funnel. People start to buy a little bit and then start to learn about Bitcoin. And then hopefully they learn about what makes Bitcoin special in terms of owning it themselves and taking self-custody, and maybe it'll drive some more adoption that way. And so that's how my optimistic view of the ETF, kind of driving people into owning their wealth and kind of using Bitcoin in a more proper way, I guess, how it was meant to be used when Satoshi created it almost 15 years ago to the day. So thanks everyone for joining. I really appreciate everyone listening. Thank you, Lynn. Thank you, Alex. Thank you, John. And have a wonderful day and a wonderful 2024.